Emergency tax codes. What are they and why you should check yours? An emergency tax code is a temporary measure used when your correct tax code is not available to your employer or pension provider. This might not sound like a big deal, but it can significantly impact your take-home pay. Having an accurate tax code is crucial because it determines how much tax your employer or pension provider should deduct from your income. When an emergency tax code is applied, you might not receive your tax-free personal allowance on the income subject to this code. This means the emergency tax deducted can be substantial, potentially leaving you with less money in your pocket than you should have. Emergency tax codes are typically identified on your payslips or in your personal tax account. They can be written in different ways, using letters and numbers such as M1, W1, and X. For example, you might see codes like 1234 M1 for monthly paid employees, or 1234 W1 for those paid weekly. In some cases, BR or OT tax codes might also be used to collect emergency tax. So why might you be assigned an emergency tax code? One of the most common reasons is starting a new job without being able to provide your P45 from your previous employer. Other situations include changing jobs, starting a second job, beginning to receive a state pension, or transitioning from self-employment to employment. The amount of emergency tax deducted can vary depending on what information HMRC has about you. Generally, you may be subject to the standard tax rate of 20% or a higher rate of 40%. One key issue with emergency tax codes is that they don't consider any tax reliefs or tax-free allowances you might be eligible for, potentially leaving you out of pocket. If you find yourself with an emergency tax code, don't panic. There are ways to change it. If you've started a new job, providing your P45 from your last job to your current employer or completing a starter checklist should trigger a change in your tax code. For other situations, you'll need to contact HMRC directly online at www.gov.uk contact HMRC so they can check and potentially update your tax code. To avoid getting emergency taxed without a P45, complete a starter checklist for your new employer as soon as possible. This allows them to update their payroll with the necessary information before your first payment is due. If you do have a P45, hand it over to your new employer promptly, particularly Parts 2 and 3. What if you've already paid emergency tax? In many cases, HMRC will handle emergency tax code refunds automatically. If your tax code changes during the tax year, any overpaid tax is typically refunded through your salary. For emergency tax paid in previous years, contact HMRC to review your tax record. They should then repay any refund due via cheque or by bank transfer. Understanding emergency tax codes and how to handle them is an important part of managing your finances. By staying informed and taking prompt action when necessary, you can ensure you're not paying more tax than you need to, keeping more of your hard-earned money where it belongs, in your pocket. You can find out more about tax rebates, and use free tax calculators at www.taxrebateservices.co.uk. The content used in this video is intended for educational and informational purposes only and does not constitute advice. We recommend that you do your own research on each subject and take advice from HMRC or a professional tax advisor.